Alright guys, in this charting session I'm going to break down how to determine your intraday bias. We'll also cover how to set up those tricky lower time frame setups and identify at the same time the key levels you should target. Additionally, we will briefly discuss where to place your entry or your entries and then your stop loss orders for maximum protection. So when you're trying to figure out which way the market is going to swing intraday, you can always rely on the overall daily trend. I mean, sure, it's usually a good idea to go with the flow if the daily chart is in an uptrend. But when the market starts making large retracements down, like these ones over here, you can just keep buying these dips and expect at the same time to come out on top. Logically, if you keep doing that, you are going to find yourself on the wrong side of the trade a whole bunch of times, and that's just not a smart way, obviously, to play the market. So let me walk you here through my simple daily process for finding the market's intraday bias. First things first. I pull up the daily chart and start looking for key structural price patterns and liquidity levels. For example, in this daily FX chart, we have this high point where the price went up, forming a buy rate liquidity zone clearly outside of this range. This is obviously an important price factor to identify because it is where buy orders are being absorbed by market makers. Clearly, this absorption eventually will lead to an engineered shift in market sentiment, which is intended, obviously, to drive the price downward. So now we have a solid starting point based on this factor here that I just described for understanding what's driving the current price movement. Also, this dynamic, I think, helps us recognize that there is an engineered liquidity on one side of the market, meaning smart money is clearly influencing at this point bearish price movement to target specific liquidity levels. And this is where framing my daily bias really starts. Obviously, I still need more confirmation, but again, this is a very strong starting point, since judging by our range here, this stop grabbing action now becomes an external to internal liquidity targeting dynamic. Also, down here we can see these marked levels. One is where the market structure has shifted via a sequence of impulsive bearish bars, which is another strong indication, I would say, of the market's bearish tendencies. The other level clearly here represents these relative equal lows, which, as you can see from the chart, particularly the first one, which supports here a reversal into this large imbalance zone. So these are clearly key factors that are influencing the process of the price action. Also, notice how here this bearish imbalance area gets respected following this incomplete, I would say, balancing move to the upside. Instead, the price only wicks into this area before retracing lower and printing another relative equal low. This clearly indicates a shift in bearish momentum, cancelling out the previous bullish movement. So seeing these price action patterns and dynamics play out on the daily gives me added validation for my overall bias. And this is where I scale down to a 4-hour chart. Now, judging by the price action so far, when you look at the order flow as the price moves sideways here, it is clearly bearish. Why? Well, because after hitting resistance at the 8400 level, price slices through the base of the bearish imbalance zone with some serious speed. But that's not all. The 7600 level here is also providing strong resistance for this sideways channel. Additionally, this second bearish imbalance zone is respected just like the first one, as the price prints another lower high, continuing a sequence of lower highs. All these elements point to one thing: order flow is bearish. Now let's connect the dots. We know price is coming from the buy rate side of this stop run area. Additionally, we see both of these bearish imbalance zones being respected. We also have these resistance levels within these imbalance areas, indicating potential points where the price might struggle to move higher. Obviously, resistance often marks a temporary ceiling for the price. So the question at this point now is, where is price heading to? Well, to answer that question, we need to switch to a 15-minute time frame where these relative equal lows need to be marked out. Why? Because even if, and let's scale down to the 15-minute time frame, even if we exclude here Wyckoff's obvious cause and effect scenario, where based on this AMD action, obviously AMD standing for accumulation, markup, and distribution, this period of distribution will eventually result in a downtrend. So even if we exclude these Wyckoff terms here, we have already got confirmation from the higher time frames that order flow is bearish, which suggests smart money is short. And we know that if smart money is short, they always aim to drive price down to an old low or up to an old high, where all the sell stops are hanging out. And this is where the external to internal smart money liquidity targeting strategy comes into play. I say comes into play because I think it identifies key points for potential reversals and anticipates at the same time liquidity levels where the price might be headed next. I believe that by understanding these market dynamics, you can read the smart money's intentions and position at the same time ourselves accordingly. And you know, speaking of positions, I think that you can enter short once the price underperforms at the flip zone here and then closes below this bearish impulsive bar. In fact, I see this dynamic as a trigger for this downward move towards these internal liquidity levels and range lows. Now, since I have a preconceived bias that the price, based on the external to internal liquidity model, is targeting these liquidity levels down here, based on that assumption, I can place my stop loss at the base of the buy rate zone up here to obviously avoid getting stopped out prematurely. In terms of closing the trade, I would cover half of my position just above the 7,400 level. Then, as I use a trailing stop, I'll add another short right below the 7,200 level to close the trade near range lows. Obviously, nothing is guaranteed in trading. However, as I always say, if you approach the trade with an objective bias, chances of that high probability trade coming through are really high. And guys, if you are looking to take your liquidity trading game up a notch, be sure to check out this next video. Alright gang, thanks for watching, and as always, hope to catch you all in the next one.